Hi everyone, my name is Ankit Jain. I am working as a senior fund manager with Mirae Assets. I am with the firm for last 9 years now, and I am responsible to actually manage Mirae Asset Midcap Fund, multi-cap fund, co-managing large and mid-cap fund as well as the great consumer fund. So in this set of videos, we will talk about all of these 4 funds in detail, which is large and mid-cap fund, multi-cap fund as well as the great consumer fund. So today we will talk about very interesting segment of the market, which is the mid-cap segment. And also in that context, we'll also speak about the Mirae Asset Midcap mandate, a mid-cap fund, which is now will almost complete 5 years in coming July. So this as a segment remains very, very, interesting segment in the entire market, because in a growing economy like India, typically you see, lot more growth opportunities are available beyond top 100 companies by the market capitalization in the market, which is classified as large cap. So mid cap fits into the middle 150 companies starting from 101st to 250th in terms of market capitalization. So we try to look into why this segment becomes very, very interesting opportunities is like in a growing economy like India. If we look into the lot more businesses businesses are coming in, lot more growth opportunities are there. And plus also the bouquet of offering in this segment in terms of the sectoral mix, that also do increase significantly in comparison to, let's say, top 100 companies. So investors can participate into the wide set of businesses while sort of coming in into while investing into this segment of the market. Also historically, if we try to look into, this is one segment where typically over a medium term time horizon, earnings do outperform large cap by a reasonable margin, maybe let's say 200 to 300 bips over time, right? At Mirae Asset, we came out with this product around 5 years back, which to invest into the mid-cap companies. So idea of launching this particular product back then was clearly that, after second win of the current NDA government, it was a lot more visibility was there on the policy certainty, continuity being there. And then I think which clearly translating into the better growth for the for the country, right? And in this context, clearly the earnings delta for some of these relatively smaller or maybe mid cap sort of businesses do sort of increases significantly. So since then, if we try to look into last 5-year earnings CAGR, in this segment, even if we look into, let's say, despite of COVID in between, fiscal year 20 to 24, earnings growth has been north of 20% plus CAGR. Plus, on top of that, if you look into the extent of, depth in this particular segment has gone up. If you look into 5 year back, average market cap in this particular segment used to be around $3.2 billion odd, which has now gone up to almost $7.5 billion. So clearly over time, if we try to look into, there has been significant increase in the overall breadth and depth in this particular segment. Lot more newer businesses are coming in. If you look into in last 5 years, there has been entry of so many newer businesses like largest fintech player, footwear companies, diagnostic players, and there are so many. In a growing economy, there will be a lot more newer businesses will also coming in into this particular segment, which can help in any investor, to also benefit being part of the growing sort of a diversified sort of a sort of a company base as well as the earnings growth potential. So that is one about the mid-cap product, but at the same time, if we try to look into the valuations over time, how they have increased, while the earnings growth has been good, index has also delivered, better than earnings growth sort of a return. So clearly at current juncture, valuations are at a premium to historical average. But if we look into with current sort of a policy certainty out here in India with very good macros, we continue to see, I think earnings growth visibility remains very, very good. Plus one more thing has happened, that quality of companies in the indices has improved significantly. If you look into 5 year back and now, overall ROE, ROC profile of the index has also, basically index has also improved. At the same time, companies' balance sheets also have sort of a deleveraged last 5 years. So in this context, yes, valuations are at a premium to historical average, but some part of it might still remain going forward as far as earnings growth visibility remains good. So I think this is one very, very exciting segment in the market, which will continue to benefit, from a better future earnings growth going forward. Thank you for watching this video.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.